Today, I have a special guest with me, Saif Ahmed, who is from Zamzam Capital. What we will do in this video is we'll break down and understand the Sharia compliant small cases which Zamzam Capital has launched. Also, understand who these small cases are for and what investors should be realistically expecting from these small cases. So, hopefully, this will be a great interaction and a lot of information for someone who's starting new can get out of this video. Saif, for people hearing about you for the first time, give us a bit of your background and what does Zamzam Capital do?
Thank you, Latish, for having me here. My background briefly is that I've been a career Islamic banker, what you call an Islamic banker for the last 20 plus years. And I'm the founder of Zamzam Capital. Before starting Zamzam Capital, I was running India's first Sharia compliant chit fund company called Zide Chits in Bangalore, Private Limited. And before that, I was part of various Islamic finance initiatives in India. For instance, I was head of risk management at Rehbar Financial Services. And prior to that, I used to work in the Islamic banking industry in Kuwait, where I worked for investment companies related to Kuwait Finance House. And prior to that, I began my career in the US, working on Wall Street with the likes of JP Morgan and Merrill Lynch. I was an analyst at the investment banking department. And alhamdulillah, I got a degree from Bates College, USA in economics and mathematics. I've also studied at the London School of Economics. And Zamzam Capital is a SEBI registered research analyst, and we are completely focused on Sharia compliant research and advice to our clients. We have two products at present. The first product is for trading, short term trading, obviously means short term. It's called stock plans. We offer both large cap and small and mid cap plans where we provide recommendations uh, with the stop loss and target and guidance. These are provided for, as I said, for trading purposes. We look at swing and positional trading. And the second product which we launched a few months ago is small case, which is what you'd like to me to explain further about. But that's for investment holding period 1 year plus. And we presently have three small cases and about to launch our fourth one shortly.
Okay, great. I think this is the kind of experience a lot of people are looking for also who can help with their investment. So, yeah, I think it's great that more and more new avenues are coming for Sharia compliant investors. So that's great to hear. So let me start by let's start from the basics. Okay, a lot of people, as you know, people who invest mostly right now in India, which who are looking for Sharia. Uh, are through mutual funds or buying gold. So that's primarily what most of the people are currently doing, or they do it on their own. So, if you would like to explain what a small case is for the first time investor and why they should consider this, if you can give your thoughts on this and how do you explain this to someone who's completely new? Let's start from there.
Yeah, sure. So small case is actually a fintech company, and they have a product, a platform rather, which is open for research analysts, SEBI registered research analysts and investor advisors who are selected by small case to publish on their platform as small case managers. Like we are a small case manager and we publish. So the platform has been so well designed by them. It's a fintech company with great technology that they have integrated with the top 20 plus brokers in India, where through a one-click username password type process, subscribers can get their brokerage account directly connected to small case and access the portfolio. The small case like ours, if they're subscribing to our small case, they get the access to the portfolio. Now, in a small case? A small case is nothing but a portfolio of shares. Ideally, the size of the portfolio are smaller than mutual funds. You don't have small cases with 40, 50 shares. Most of the small cases by other publishers as well as ours have between 15 to 25 shares at the most. So they're more concentrated and more being more concentrated, the chance for alpha or better overperformance to the index, relevant index is much higher, as you would understand. So that's what a small case is. When you purchase a small case, you get access to the portfolio, which is determined by the small case manager. precisely in terms of portfolio weightage, allocation to different sectors, industries, based on various themes. So there are various themes in a small case. You could have a theme-based small case. You could have a sector tracker type small case. You could have what's called a smart beta, where you try to have a strategy. You could have factor-based small cases, etc., etc. So we have a theme-based small case. We could talk about the small cases we have, but we have a theme-based and we have a
Yeah.
smart beta and we have also a tracker type small case. So we could talk about each of our small cases
Yeah.
if you like.
Then I think the most asked question or the most asked query which I keep getting, right? And it's also something which a lot of people who have already started investing get to me in terms of asking this question is because they're investing in Sharia based investments. And they also, because of the restrictions which we have in terms of investing in different companies, the question which they ask is, are they restricting their returns because they are investing in Sharia based products, right? So what's your answer on that? And because a lot of sectors which I understand that works in cyclical way, sometimes banks work, sometimes auto works, some other sectors work. But what's your view on this common misconception is what I call that if you're investing in Sharia based assets, your returns are lower.
Well, you're right. It's a misconception because it can cut both ways. Yes, we don't have the complete universe to invest in. For instance, Zamzam Capital does its own Sharia screening. We don't use a third party Sharia compliant list of stocks, what we call a Halal list. We produce our own every 6 months, we update it, and we only screen companies that are listed in the NSE and above 500 crore market cap. So that said, we screened last screening was done as of September 30th, 2025. We screened over 1,800 companies, of which more than half, 900 plus, were Sharia compliant as per our criteria. And we use a very extensive criteria. We remove out industries that are non-Sharia compliant, sectors, industries, which you obviously know about, like alcohol, banks, tobacco. We even remove defense sector for ethical purposes. Then we
Mhm.
also use financial ratio screenings. We go to the second level where we have five ratios, not one or two like most others. We use five financial ratios, and these are listed on our website. And we even go to a qualitative level of screening where we even look deeper into a company's financial statements, annual reports, websites to see if there's anything else that appears to us to be non-Sharia compliant, which is then debated with our Sharia board. And after doing all that, we still got more than 50% of stocks being Sharia compliant. So that's a good enough list across various sectors, obviously excluding the sectors that are not permitted.
Yeah.
So yeah, I guess you could only say that if, for instance, only the IT sector was booming, because we even exclude, now that I mentioned IT, we exclude a lot of IT companies on the basis of our qualitative screening criteria, where because a lot of IT companies like Wipro, for instance, Infosys, Tech Mahindra, etc., are working for banks as major clients, and banks provide more than 5% of their revenue, banks and insurance companies, and the work they do for them is sort of critical. So we have a
Yeah.
Sharia ruling that we even exclude them. So if the IT sector is booming or the banking and finance sector is booming, and no other sector is, then yeah, perhaps we'll underperform. But that's very rarely the case, right? You have various sectors doing well at the same time. So we're pretty much there. We're allowed to invest in chemical sector, pharmaceutical sector, industries, infrastructure, so FMCG. So we have lots to choose from. So I
Yeah.
don't see that being a case at all. In fact, to the to the contrary, uh, we have a ratio that we use in our financial screening known as leverage ratio, where we use,
Hmm.
for instance, interest-bearing debt, which is basically conventional debt on the balance sheet, should be less than 33% of total assets.
Okay.
So since we look at less leveraged companies, they tend to perform better than leveraged companies, as you'd understand. Their
Hmm.
interest expense would be lower than more leveraged companies. So, and the performance would, the net income, the earnings would then, as a result, be higher.
Yeah.
So you
Better.
could say we actually choose companies that are better in terms
Better
of
placed.
performance. Yeah, and their stock prices should reflect
Yeah.
that.
Yeah. Okay. Great. Great. Yeah. Like I said, it's a misconception people have. I don't have the view, but I still thought it's good that you share also. So I think you shared a lot about sectors. So let's get into the meat of the small cases which you handle, right? So I think you have right now three small cases. So
Yeah.
how do you decide, or how did you come up with these sectors? How did you decide on the models which you have built, and what is that people should be aware of when they are looking to invest in these small cases? So, a brief about your small case and all the things
Right.
which people should know about.
Yeah. Our first small case, which was started, was the infrastructure uh, tracker, Shariah infrastructure tracker, which is comprised of all infrastructure related sectors, including railways, shipping, roadways, uh, even real estate related infrastructure, anything to do with infrastructure. And that was a sort of a natural choice because infrastructure companies, because they had fixed assets on their book, their leverage ratios were also some were and some weren't, but quite a few met their leverage ratios. It was sort of a natural fit to start off with because it was a broad-based sector that we're looking at. So we decided to make a small case that is made up only of infrastructure-related assets uh, and keep it broad-based so that we are able to beat any cyclicality in any subsector, for instance. So we came up with that. Then we wanted a small case that encapsulated all the sectors and still be Sharia compliant, all the Sharia compliant sectors. So we came up with the ZC, the Zamzam Capital Sharia Leaders Smart Beta small case, which is our most popular small case because it's the most broad based. And in this, we look at the sectors that are performing at a given time based on our fundamental and technical analysis framework. And from those sectors, we choose the top two or three stocks that are either the number one or number two or number three are the most within those sectors and include them in those in that small case. So that's that about that small case. And the third one we have presently is called Sharia New India theme. So it's the new India, the modern economy, things like electric vehicles, solar panels, data centers, biotechnology firms, all cutting edge technologies that are critical to India's growth and defining the new Indian economy. So yeah, so a lot of times we say that when you compare India to the US market, for instance, things like AI and cutting edge semiconductors, etc., are missing here. But that said, we still have quite a few good plays. We have electronic component manufacturers, we have precision engineering companies. So, and a lot of these are Sharia compliant. So when we go deep and we understand their business models, we felt this would be a good certainly more volatile than the most
Yeah,
volatile of our small cases, but also high beta chances of outperformance are higher, but definitely on the risk scale, high risk. But we've put that out as well, and we felt it's important to also get exposure to this side of the
correct.
economy
Yeah,
for our subscribers. Yeah, we're also working on another small case. Which will be released shortly, which will be a passive like an ETF uh, type small case where we'll be tracking the Nifty 50 on a quarterly basis, rebalancing.
mm,
So I can talk about rebalancing, but we do this on a quarterly basis. We're going to be doing this on a quarterly basis and only be looking at the Nifty 50 components, stocks, and look at the Sharia compliant stocks that are in our top 10 or to 12 such stocks that are we feel are the best place to have some outperformance going forward.
yeah. Okay. No, yeah, I think that's a good overview about it. So, yeah, you just touched upon rebalancing and also some of let's capture those factors on what people should be aware of when they're investing in when as through a small case, right? So, what's their input or what's the actions which they will need to do? Because it's not like a mutual fund wherein they just put the money and forget about it. So, let's touch upon those, and it's very important because most of people think that SIPs automatically also deduct in small case. It doesn't happen that way, right? There has to
Correct.
be an activity which they will need to do. So you can share
Correct.
those and also, yeah, touch upon all of the factors which you have learned so far in the last 2 3 months dealing
Correct.
with.
Correct. It's still an early journey for us on small case, but as if I look at it as a subscriber as well, from a subscriber's point of view, I feel it's a fantastic technology. It's really amazing fintech that they've come up with. And you're right in the sense that unlike a mutual fund, it's just not invest and forget about it, and the SIPs get deducted from your auto pay. You could do that in small case also. You could have a fixed SIP getting deducted every month. But small case is a more interactive platform. So what is best there is I'll just explain you the process. Initially, when you subscribe to a small case, uh, you pay our fees, the small case manager's fees, and you get access to the small case. And if it's the market hours, you could purchase the small case during the market hours. And in a one-click type process, just enter your username, password to your brokerage account is connected. You could, in one click, literally buy the shares that are executed on your broker platform. Just one click, all the shares get executed, all the buy orders get placed, and they come and show in your demat account. So that's one big difference, that you see the shares actually in your demat account, uh, unlike a mutual fund where you just get units.
Yeah.
Then usually, mostly you have monthly rebalancing done by the small case managers. We have monthly as well. So once a month, not more than 5 minutes of your time is required. When the rebalance is pushed by us, to accept the rebalance, you just need to click on the accept rebalance button. And again, one click process, some shares are bought and some shares are sold from your small case. Now, what is rebalancing is one of the real advantages of small case. Now, a mutual fund is a very big entity, right? It's a huge DII, domestic institutional investor, which is, has a huge AUM. So a mutual fund can't easily exit any position they have because they have such big positions. Whereas a small case manager can easily enter and exit positions on behalf of their clients if we have a need to. And we don't excessively churn. We only do so whenever we feel a particular stock or stocks are not meeting their performance expectations that we had, or they have become Sharia non-compliant, for instance, for any particular reason in between our Sharia screening process. So then we exit them in the next forthcoming rebalance. So that gives us that nimbleness which is not there in a mutual fund, and it just takes 5 minutes, as I said,
Yeah.
uh, for the subscriber during market hours to accept and execute that. So that is this. That's about the rebalancing. Regarding SIP, the beauty about small cases, you don't have to fix the amount. You could put any amount you want, whenever you want.
Yeah.
You can add just top of your investment, and your fees, that the fees that you pay to the small case manager stays the same. There is a minimum investment amount which you have to put in at the time of subscription, but whenever you top up and whenever you want to add more anytime, you do 3 4 times a month or one particular date every month, as much as you want. The fees that you pay, and as a result, your cost keeps going down. Your cost of the fees in terms of what you pay to the small, that is us or the small any small case manager, continuously goes down as your investment increases. So
Yeah.
that's another differentiating factor.
Yeah. Yeah, no, I think very well explained. This is what I also try to do, because people need to understand the difference in mutual fund and when you're investing direct stock through a small case. It's very important for them because it's a more of a
It is,
little bit of hands-on activity, at least a month. They should know what's happening.
I would say small
Let,
case
let
is
me
more like a PMS fund, because you can actually see the stocks you own in your account,
correct.
as
Yeah,
opposed to a mutual fund. I think it's a good mix between a mutual fund and a PMS, giving you the best of both
both.
worlds.
Yeah, yeah, yeah. Yeah, let's touch upon. I know it's very difficult topic, but it's something it's happening right now in the market. It's not doing well. Markets, although the I think indices are doing pretty okay. A lot of mid caps, small caps have not been performing well. So I think from your point of view, when an investor does invest through a small case, it goes 10-20% down. What is that you advise them? What is that they should be looking for? And also, what's the time frame they should be looking at when investing in small cases or in general stock market, right? So what's your view on that?
Good question. So we always pitch small case as an investment product, not as a trading product. Minimum 1 year holding duration, but 1 year is the bare minimum. We'd say you'd only need to exit in 1 year if you find a problem with the small case manager, or you really need the fund liquidity. There should be something, but ideally you should look at this like you would in a mutual fund, 3 4 5 years or even more. saving for a particular target in mind, life event in mind. So that's what you need to look at a small case in terms of duration. And market downturns should not worry you because you're investing for the long term. There's market is, as you know, doesn't go up or down in one line. There are a lot of ups and downs. And talking about the present scenario, we've been hit with one bad news after another for the last 1 year, and particularly the recent, the rupee depreciation and the tariffs before that. So I think all the sort of bad news that could have come has come, and I think now the government with the GST modification and the boost to the economy that is coming, and we're looking forward to the budget that will be coming fairly soon. I think we're well poised for a further uptick now, and the bull run should resume after this correction, which was also much needed. I think the Indian market is quite heated, so this sort of correction gives you that time for the things to cool down and resume their upward journey again. But as I said, we are looking at it from a long-term point of view. So I think the best years are ahead. We certainly have all the structural strengths in the Indian economy are very strong for the next 10 years, demographic dividend and all the investments and infrastructure and further investments that are being made by the government will all come through. And I think as our GDP grows, it's going to be reflected in the stock prices.
Yeah, yeah. Yeah, I think this was the year of resilience. So if someone was able to hold to their investors or starting investor, I think in the next couple of years they'll actually see the results. So these spirits are good. In fact, that's what I keep telling everybody. Yeah. I think the next question which I have is you did mention this, but let me highlight it. So Saif is a SEBI registered research analyst, right? So what I want to ask you is why is this registration important from an investor point of view? Because you get to hear a lot of scams which happen probably not in stock market. Also there are a lot of, I mean, the tips go for, people who are not registered, right? So as a research analyst and you're also registered with SEBI, why do you feel that this is very important for someone who's investing to go through someone who is registered, and how does that impact their investments in the longer term? So
Yeah, I mean, number one, it's important for the investors to always go with a registered entity intermediary with SEBI because SEBI is the regulator for investments because it also protects them from fraud and it protects them from any misinformation and they have recourse to law for that because for instance when we sign up we have to deposit a certain fixed amount to the regulator that is held as long as our license is there, and that keeps on increasing with the number of subscribers. And we have to report. There's a complaints board that is there. We have to respond to any complaints by our customers, and SEBI also oversees that. So all these checks and balances are there so that we don't missell our services. Another
yeah,
important criteria is that we're not supposed to recommend those stocks in which we cannot invest in the stocks that we are recommending on a personal capacity. There's a cooling off period before and after. So all these things have been put into place because see, you have a lot of pump and dump schemes, a lot of manipulation, all these WhatsApp, Telegram groups. Most of the people who are giving calls there who are unregistered. Number one, what they're doing is illegal. But why they really do this is sometimes they even just put it out for free because they already hold positions in such stocks and they have a large following. So when all these scams have come out in the public, we don't need to take names. So many people in the guise of training, and they were basically front running various schemes, and even the news channels, business channels were involved, etc. So we've seen all of those things. SEBI has uh, found out many of them and has banned a lot of such operators. But that's what you are susceptible to because you will ultimately be manipulated and you will be sold positions that they already hold, and they will then make an exit at a good profit, and you'll be left with a stock that's falling down. So that's to save yourself from all that. Always go with a registered entity, and we sort of focus on the Sharia compliance space. I should mention that there's a real shortage of Sharia compliant research analysts in India, and a research analyst is that entity that who you could also be an individual, and we have got it through our firm, Zamzam Capital. It's an entity, research analyst is an entity that is authorized to give advice to the public on any matters related to stocks and securities that have, whose prices fluctuate. We are only authorized to do that on a public basis, one to many. Whereas there's
Mm.
another category called as a registered investment advisor. They are also SEBI regulated, but the difference between us and RIA is that registered investment advisors work on a one-to-one basis. They can formulate their customers' investment plan and give them personalized advice on what assets to buy and where to allocate their wealth, etc. We are not supposed to do that. We're supposed to just conduct research and disseminate that to the public in form of stock advice or small cases, etc.
Yeah, yeah.
So there's a
No,
huge
great.
shortage Sharia compliant. You can count on your fingers the number of Sharia
Yeah,
compliant experts or registered entities there are in India today. So we're happy to grow that space, and we in fact want more and more such entities to come up so that the Sharia compliant investors, who are many, have options on what they are able
correct.
to invest.
Yeah, yeah, for sure. Yeah, so I think I broadly covered what I wanted to cover in terms of the questions which I do get from a small case point of view, right? So, are there anything which you think you want to share from a Zamzam Capital point of view, and also from a future point of view, how we look at the Sharia investing space in India? The last thoughts from your end.
Yeah, great. Yeah, thanks for the opportunity, Ratish, again, that you're giving me. And what I would tell Sharia compliant investors who will be watching this podcast is that there are basically three broad categories you could invest in. One is real estate, one is precious metals, basically gold, and third is stocks. So real estate, gold, silver are invested to a large extent, but stocks is one area where a lot of people, participation rate is extremely small among the Muslim community. So this needs to increase, and you now have opportunities, you have avenues and products. So we are happy that we are playing a role in that and increasing the product pile. You basically had three mutual funds and a few small cases, so we're trying to grow that space. Definitely only to invest in registered products, regulated products. So that's what I would encourage you to increase your allocation to the stock market. Because if you look at history, if you look at past returns, so we'll say over the last 20, 30, 40 years, stock market has delivered the best returns of all asset categories. And that's a fact that can be verified very easily.